COSATU has called on Parliament to amend the budget and scrap the contentious VAT hike. The Labour Federation's parliamentary coordinator Matthew Parks says the move will hurt the poor who already can't afford to buy food and electricity or pay for transport. Instead, COSATU has proposed that the budget should include more progressive revenue options that will stimulate economic growth and create much-needed jobs. Metair slipped into the red. The automotive components counter has posted a headline loss per share of 203 cents. That's from HEPS of 135 cents previously. Metair cited reduced production volumes as well as the severe financial downturn of its Turkish operations, which it offloaded in December. But it's added that the disposal has markedly reduced risk on the balance sheet and that it's actively seeking additional growth opportunities to ensure sustainable profitability going forward. The firm's also announced the extension of CEO Paul O'Flaherty's term until the end of 2028. This gives him more time to implement the group's turnaround strategy. South Africa's economy is expected to get a boost from stronger consumer spending this year, and groups such as Mr. Price, TFG and Capitec are poised to benefit from this. That's according to 91. The asset management firm says rising disposable incomes, lower interest rates and better job prospects are creating a favorable environment for retail and banking stocks. The group added that investors are now focusing on companies' financial performance rather than market optimism alone. And so 2025 is a crucial year for businesses to prove their strength through real revenue and profit growth. Bell Equipment's refined its year-end performance forecast. The designer, manufacturer and distributor of heavy industrial machinery says its headline earnings per share could decline by up to 44%. Back in December, it had flagged a drop of 40%. Bell cited weaker market conditions. More detail will be provided when it opens its books on Friday. Zeda scaled back its Africa exposure. The firm says its financial services unit is offloading stakes in some African businesses. These include Zimbabwe, Mozambique and Zambia in light of operational and economic challenges. The deal is valued at 135 million rand. An international panel is being assembled to advise SA's Energy and Electricity Minister on the country's nuclear capabilities. Josienzo Ramokgopa says the appointments are being finalized and they won't have any links to vendors. He's added that decisions about nuclear energy must be based on the country's sovereign interests and that with geopolitics being fought on the energy front, SA must be clear in positioning itself. South Africans have seen further gains in purchasing power. Take-home pay continued its upward trend in February and hit a 3-year high, according to the latest BankServe Africa Index. The average real take-home pay adjusted for inflation rose by 10.7% year-on-year. Independent economist Elise Kruger says the rise in real earnings is largely thanks to sharply moderating inflation. Further afield, the U.S. added 6 subsidiaries of Inspur Group, China's leading cloud computing and big data service provider, and dozens of other Chinese entities to its export restriction list. Let's take a look for more detail.
Washington has added dozens of firms to its export blacklist. Most are in China, but others are in Taiwan, Iran, Pakistan, South Africa and the UAE. Among the most high-profile additions are 6 subsidiaries of Inspur Group, China's biggest cloud computing provider. They have been targeted for helping develop supercomputers for the country's military. Inspur Group itself was placed on the list 2 years ago. The US blacklist is meant to restrict Beijing's ability to develop cutting-edge systems for its armed forces. China's embassy in Washington said the military angle was just a pretext to weaponize trade issues. The US also wants to disrupt Iran's procurement of drones and other defense gear, and to slow its development of ballistic missiles and nuclear technology. Once firms are added to the blacklist, US companies are barred from selling to them without obtaining a license, which is almost certain to be denied. When Inspur Group was first placed on the list in 2023, executives from US chipmakers AMD and Nvidia were questioned about their dealings with the firm. It wasn't clear if the US businesses had continued to supply subsidiaries of the Chinese company.
And British inflation slowed by more than expected in February, bringing some relief to consumers ahead of a likely new pickup in price growth. Here's more detail in this report.
British inflation slowed more than expected in February. Official data released Wednesday showed consumer prices rose by 2.8% in annual terms, slightly less than analysts expected. The figure was somewhat of a relief for British shoppers after January's 3% uptick. Costs for clothing and footwear fell for the first time in over 3 years. However, economists warned that rising energy prices will push inflation up again soon. Analysts were also mixed on the data. One told Reuters the Bank of England would remain wary about price pressures, but another argued the central bank would probably take comfort and said it leaves the path clear for another rate cut in May. The Bank of England expects consumer price inflation to peak at 3.75% in the third quarter of this year. That's almost double its 2% target. It believes the rise will be driven mostly by higher energy costs and regulated tariffs for household utility bills and bus fares.